What's up traders, welcome to Failure to Displace. In this video we're going to analyse the London session on the EURUSD Pair. A very tricky session and I took two losses here in this one, so I want to dig back into price action and see what I could have done better to try and mitigate those losses. So we'll start on the 15-minute chart and we can see that coming into the London session, which is my pink shaded box, price has come down and taken out the Asia low. So this is our failure to displace, current daily low and Asia low. Took out the low, respected a 15-minute fair value gap, pulled back in the range. So we've got the open of the session just here. We'll jump onto the 1-minute chart now. And unfortunately, at this point, there was no entry for me. We saw price dig out, close back in the range with displacement. The break of structure is up here. So this is our swing high. We've left this big fair value gap here between these two candles. Unfortunately, price never came back to tap any entry before it started taking liquidity. Got relative equal highs here. Obviously, we ran straight through those and we ultimately took out the Asia session high for another failure to displace. So we'll get rid of that. So coming in here, this is where I was looking for a short trade. At the top, we swept the high aggressively, which is good to see, and then had an aggressive pullback. We can see on this pullback, we left a balanced price range. Our balanced price range is a bullish fair value gap going up, followed directly by a bearish fair value gap. So where these two gaps overlap is our balanced price range. This is one of the best things I like to see in price action. Always offers a great reaction when those are getting tapped. We left this large fair value gap. We also left a breaker block. So the last down closed candle before we took the high, that would act as a breaker block. So there's quite a lot of confluence for a short here. So I had a trade waiting at this fair value gap. Price obviously pulled away back into the range. It came back to the optimal trade entry. Because price had already moved 16, 17 pips, 4R from my original entry. We've taken obviously lots of low resistance liquidity run here. So we've taken a load of liquidity here. I should have cancelled this trade out. Or I should have at least waited for price to come back to the breaker block and offer some kind of reaction. I didn't. I left that trade on and obviously we swept that high again and got stopped out. So that was loss number one. When we swept that high, again we had a good solid reaction. So we left a balanced price range, bullish fair value gap, followed directly by a bearish fair value gap. Let's zoom in on this price action. Obviously we left the main fair value gap here, we left a breaker block, so the last down closed candle before we swept the high, so we had a breaker block. So I was like, oh, okay, history repeating. If we can get tagged in here, I'll take this short. Unfortunately, what I did on this is I used the wrong risk management. So I set myself with a 5 pip stop loss, 5 pip take profit for a 1-to-1, so I could go risk free at 1-to-1 based on 5 pips. In hindsight, I'm not quite sure why I had the stop loss at 5 pips. The stop loss should have been above these highs. So these are what created the fair value gap. It should have been a 3.4 pip stop loss, which means that I would have gone 1-to-1 risk-free in here. So as price pulled down on this wick, I would have closed half of the position out, making myself risk-free. So I've taken 50% of the trade off now. So I only have half left. Price has come back, stopped me out, so I've lost half of the position. Therefore, the 50% profit that I had taken would have cancelled out the 50% loss that I'd taken, making me net zero. So it would have been a risk-free break-even trade. However, I totally mismanaged it. And based on a 5 pip stop loss, we missed it. We didn't get it. I saw this wick. Should have been worried when I saw that wick. We respected 50% of this fair value gap. So this is where I just was not on board with price action. Come down, we've respected the 50% of the fair value gap. We've wicked through, respected the 50% of that fair value gap again. I should have just closed out at break even here. I didn't. I held it. I was greedy. I was convinced I was going to pull a magnificent trade to come down and take out that New York PM session low for a 6R. So bad management on my part on that trade. There was enough indications here that I could have got out risk-free. I could have either gone break-even when I saw the 50% of that fair value gap being held, or I should have been risk-free at any point because my stop loss should have been above the high for a 1-to-1 risk-free trade just below the 50% of that fair value gap. And consequently, price has pumped up now. The other thing that I want to note here, what I have done, if you've watched my previous videos talking about the 2022 mentorship, I've said that I want to see strong displacement, which we've got. Maybe not so strong. Well, no, strong displacement on this one and strong displacement on this one. I want to see it pulling back in the range. So this entry, we weren't back inside the range. The Asia range is here. And this entry, we took the high, so we were back in the range on this one in all fairness because we'd taken the session high. So this trade here was really invalid anyway because you're trying to short outside of the range. Here we'd put in a new range, so we had a new session high here. So we swept the session high. So that was valid. That was just poor trade management on my part. Obviously price has continued high now. I'm not sure what it's going to do for the rest of the day. But that was my London session. Not exactly a well executed session in my opinion. Certainly room for improvement. I want to be honest with you guys and just show you the reality of trying to trade these things live. We can look back in hindsight, which is always really useful, which is what I encourage all of us to be doing. It's going back and reviewing the sessions like this and then logging where we could have done better. So for my log today, I should be logging poor risk management here, taking note, you know, that I made an error there, and also I was trying to take shorts outside of the range. The good points, I suppose, is that I did highlight solid areas, so I knew where a reversal was coming, and it was a good reversal. And here, likewise, the setup did play out for a risk-free, so this shows that my risk management, if I'd have executed the risk management properly, was a solid risk management setup as well, and would have protected me if I'd have executed it properly. So a couple of key takeaways. I hope you found it useful. We can't have every video being a glorious thing of wonderful, profitable trades, unfortunately. This is one of those where it's just going to be a couple of losses and a couple of key learning points on there. So if you did enjoy the video, please give it a like. If you have any questions, please leave them down in the comments section below. If you're enjoying the content and want to see more videos like this one, then please consider subscribing. I am dropping videos more or less every day. And we've potentially got a trade on Australian dollar popping up. Okay guys, thanks very much. I'll see you soon.